Boral shareholders will have to wait a bit longer for a turnaround, with the company warning that difficult conditions are likely to remain this financial year. While Boral posted a small rise in net profit, underlying earnings were sharply lower, largely because of a dismal June half. The company also has to sort out its succession plans after former CEO Mark Selway was ousted from the top job in May. Neil Woolridge reports.
A combination of Australia's housing downturn and unusually wet weather has seen the building products maker Boral caught in a perfect storm at home.
The most difficult combination that I've seen in the 21 years that I've been at Boral.
Tough conditions at home combined with a moribund US housing market and only slightly better conditions in Asia saw Boral post another weak earnings report. While full-year net profit rose 5%, that was inflated by $75 million in significant items, mostly from the revaluation of its Asian business. Without that boost, underlying earnings fell 48%.
Coming out at the bottom end of the range, a property sale not making it through, and the result itself helped by a lower tax rate, it wasn't anything amazing.
Boral says profit in the 6 months to June fell nearly 60%, and it's warning that challenging conditions are likely to remain throughout the 2013 financial year. The company's focus will now be on reducing costs and selling off more non-core operations.
So we've right-sized the business, and we're ready now, for when that market recovery happens. And we have effectively lowered our break-even points over there quite effectively.
They were very clear in saying that they don't need to raise any equity at this point in time, but the market will certainly be keeping an eye on the gearing levels. In terms of the macro environment, it still remains tough.
While Boral is waiting until its November AGM to give updated profit guidance, the company says there are definite signs of a recovery in the US housing market, albeit a modest one.
Mortgage rates are very cheap and attractive to buy. The negative real interest rates in the US is very conducive to buying yield-producing assets, and property is one of those.
Global equities investor Chad Padowitz says after several lean years in US housing, only the strongest players remain, leaving them to capitalise on any upturn.
Because of operating leverage, any slight increase in orders or production can have a very strong bottom line effect. So even a tepid recovery can be very beneficial for most housing-related players.
Boral's 2012 financial year was made even more difficult in May when its former CEO Mark Selway was ousted after just over 2 years in the job. Ross Batston agreed to take the helm until his retirement next July. He says the board is working on the succession process and he's ready to step aside early if needed.
I am a shareholder. I'm committed to this role. I'm not sitting in my office twiddling my thumbs.
Fletcher Building's outgoing chief executive Jonathan Ling is already firming as favourite to become Boral's next CEO. But whoever does get the top job is unlikely to enjoy a quick or easy recovery.